Hi, everyone. Thanks for joining us. Today we have Sara from TechLAB. She's going to be talking about nailing the investor pitch, which I know for a lot of engineers, first-time founders, or really anybody, that can be a pretty stressful topic. It can be kind of a big mystery exactly how to go about it. But fortunately, today we're going to have somebody who can actually help shed a little bit of light on that. All right, Sara, I'll go ahead and put your first slide up here, but if you kind of want to introduce yourself, start talking.
Thank you, Austin. Really a pleasure to be here and join this group. I'm hoping that today's presentation is going to give you a lot of insight of what it takes to pitch to investors, but I want to kind of raise a little bit of a first kind of make you think a little bit. Have you ever wondered why some founders raise millions of dollars with half-baked ideas while others are, also have brilliant ideas, but they are never able to get a first meeting? That's what we're going to cover today, is how do you get in the door? But before I do that, before we dive further in, I'd like to quickly introduce myself so you know who I am, where I come from, and what I've been doing. My name is Sara Rauchwerger, and I'm the founder and managing director of TechLAB Innovation Center. TechLAB Innovation Center is located in Santa Clara, California, a couple of steps away from the NVIDIA headquarters. If you're familiar with NVIDIA, hopefully you are, a very well-known company. What we do is our mission is to basically cultivate technology companies and connect them to entrepreneurs globally. We have two focal points in what we do. One of them is literally a physical space. It's about 10,000 square feet, and we host startup companies. They have their own facilities where they can work and build their companies. We are a little bit in a niche area where we're focusing on data-driven, but we've started this in 2013. What does data-driven? This is everything in our world today. Everything that we touch is data-driven. And the reason we're in this niche market is because we're partnered with a data center, which is right next door to us, called Cologix, where they do a lot of the hosted services. So at some point, what we're looking for is for these companies to grow and end up managing their own networks before they jump to other locations. We host about 35 companies, but how do we make these companies successful in our space? And this is what we're going to be talking about today. We do a lot of knowledge sharing, help them with business development, partnerships, which a lot of companies need. And one of the key areas where people get a lot of exposures is events and seminars. We do have delegation programs, networking. We're a very technology-centric environment because a lot of our team understands where technology comes from, what it means, where does it go next. We have seen a lot of cool companies come through our center, and I'm very proud to say that to date, we've raised probably more than $500 million for a lot of these companies. With that in mind, what does it mean to be successful? How do these companies get to this level? And that's what we're going to dive in today. So in order to be able to get a meeting with an investor, you have to have a strategy in mind. And there are a couple of areas where you need to consider. One of them is you have your traditional, you got to give them some document to read that tells your story. But intertwined in it, which makes it the most important element, is a strategic narrative that tells your story and sells your idea. What does that mean? You want to make sure that you demonstrate that you're focusing on building a business. There's so many cool ideas out there. There's so many opportunities to build, lots of things. But it could be a hobby with no business opportunities. It could be just a very tiny market with no opportunities. You have to put yourself in the position where an investor is listening to you with a mission to say, I want to invest in you because an investor wants something out of it. So how do we get there? It's really about building a business that is sustainable and scalable, where you're executing on a set goal with an experienced team, tackling a real market opportunity. Like I said just now, a hobby is great. You can sell an idea of something that's cool, but if nobody wants to buy it, there's no business in it. And I've seen it all. I've talked to hundreds of founders when they share their passion of that they built something and you ask them, so who's buying? Some of the answers are, well, don't worry about it. We'll have a market opportunity. We'll build it. It's great, but an investor doesn't buy into that. So how do we tell that story? Let's start with the basic. You got to give them a piece of paper. I say a piece of paper, some digital document that has your story. And most of the time, if you could go do a lot of search online, you will see that a pitch deck, they want 10 slides at the minimum, not more than that. It needs to have the hook, the problem, the solution, tell them how you make money. What is it that you're building? How are you going to sell it? Do you have any competitors? Who's your team? Give them a little bit of, the idea of how you're going to get there financially and what exactly are you asking for. Keep this in mind because this is key to telling your story. But as part of telling your story, you've got to show them that at each one of these slides, you're offering some sort of value proposition. Sometimes people look at a deck as just individual slides, but it's not. It's asking yourself after you put that piece, that document together on each slide, you have to ask yourself, put yourself a little bit, you take a step back and you say, have I answered the what, the why, the where, the when, and the how? If you have, you're in the right direction. What does it mean now on the other side? Because I gave you two different scenarios. The traditional, we've got to build that document. But then what is the narrative? The narrative that's allowing you to build that document. What does it mean when I ask you to ask yourself on each slide the when, where, and how? So the first one is the basic one. Why did you create the company? What is the reason you're here? How do you solve the problem? What did you see as a pain point to create this company? How do you make money? Every investor wants to know that because they're not in there just for charity. If you want charity, don't go to investors. Investors want returns. Another question to ask is, building products and services, you're not alone in this world. There's a lot of people with great ideas. Everybody's building something. But how do you compete with them or are first to the market, or you have some sort of barrier that tells the investor that you can succeed? The next part is, as I mentioned earlier, who's buying? Who are your customers? Do you know people? Do you know anyone? Can you build partnerships? Can you get access to that market that you're talking about? And then the most important is, who are you working inside? Who is your team? Are they qualified? Do they have experience? Or are they learning as they go along? Because sometimes you could be extremely technical and understand the product or service that you're building, but you may not have experience on the business side. And we see a lot of that. Brilliant technical minds, zero business knowledge. That doesn't mean that there's no opportunity. All it means is that you should be able to bring on board somebody that understands the business. Business development is not technology development. They're different. They merge together when you're building a company. but you need those expertise. The last piece is great. You've got this great idea, you've got this great technology, you've got this great product or service that you're building. Is there a real market opportunity where you can turn your vision and create an impact to give that investor that you want the money from a return? Because at the end of the day, an investor is looking for some sort of exit to be successful in joining you on this, road of where you want to go. The other piece of this story is it comes back to the investor. Every item on this list that I'm showing you here has some sort of financial result. So each of these points are linked. And I'm going to go through each of these points to explain to you how to get there. As part of creating that pitch deck, you need to deliver what I said, a compelling narrative. And what does that mean? It's not to show a hobby, but it's to build a scalable business that is value driven, which means customer wants it. And investors and partners are alongside with you, helping you in this road to success. So, aligning the two narrative that I talked about, the traditional pitch with that strategy, let me show you slide by slide on how to achieve that. Number one, your mission is to exploit a market opportunity with this great idea. So you got to set up a hook. Many times, the first 20 seconds that a startup comes and pitches to anybody, they forget to tell their audience what exactly do they do. And it's ironic and amazing how many times I have seen that. My team has seen that. You could ask a lot of people. They walk in, they're so excited, but they never tell you what they do. That first 20 seconds, tell us what you do in a very short 3 words. Make sure it's compelling. Make sure that it already tells you the benefit and that it's believable. As part of the strategy, you're already starting to sell and tell your audience that you have a set of clear goals and an objective to build a business. And if those two are not merged together, don't even bother pitching. Number 2, the problem slide. Remember I showed you earlier, why did you start this company? What was the problem? Did you discover something that's unique that you can solve? Dig deep to discover what truly resonates as part of the problem. And the best thing to do is make sure you understand your customers and what makes them happy, because you're trying to solve that problem for them. If you can't describe the problem, then it's just a hobby. This comes back to, why was it necessary to create your product and service? What is the pain versus the opportunity? Either can be good. It depends what you're building and what you're doing. So describe the problem, but in a way where you clearly demonstrate that you understand how to solve that problem. Next slide. Now that you describe the problem, you have to show a solution. You have to show that you've built something that's worth the investor's evaluation. And at this stage, one of the things to make sure you're observant when you're pitching to anyone, if you're engaged with anyone, they should be excited to continue listening. Because at this stage, everything else is kind of a boring topic, because it is about you, and it's now you being extremely excited about what you've built and the opportunities out there. But remember who your audience is. It's the investor. So from the minute of telling them what you do to the problem, that better be compelling for them to continue to listen. If you notice today, everyone has some sort of gadget around them and a distraction. As soon as you notice that whoever you're speaking to is no longer paying attention, you're done. You need to understand how to pivot to get out of this. So let's continue with the solution, because now it's where you show your passion. You are building something that will grow, and it's aligning with a mission and a momentum that you project will take off. And that's the reason there's a purpose to this business. At this slide, you're now describing your offering. What is it? And make sure that it's customer centric. You're solving a key opportunity for a particular pain. And you're painting the picture of how this solves the problem. You can use stories, case studies, some sort of scenario, so you continue to get that investor engaged in what you're doing. Each time you tell a story, it builds a visual. It helps the investor continue to be engaged with you. Once you told them what the problem is and how you solve it, naturally you need to tell them how you make money out of this. You don't give anything away for free. And in order to scale, you have to be able to figure out how to sell this to a mass market. Because there's different types of market opportunities. And what you don't want to demonstrate is, I'll describe it as a Starbucks where you go pick up a cup of coffee. That particular shop is targeting the local area within a certain distance. But that's not the kind of business you want to build. You want to build the kind of business that Starbucks has built, where they could open multiple shops across the country, across the world. They've built a brand with a theme. Why do people go there? You could buy coffee anywhere. But Starbucks was selling, come and sit, hang out, chat, socialize. That's what they were building. And it spread. And it was a very simple model of how they generate revenue. You've got to show that type of scalability of how you move from one small audience to a larger audience. If you can scale nationwide, that is phenomenal. If you could scale globally, that is even greater. So if you can show that kind of level of growth, better for you. But it's not easy, because there is another slide that we'll go through, how do you get there? But back to the business model. How do you structure a business model to make sure it scales, that you could generate revenue, that you are not overspending, because financially you need to manage at an early stage your finances. So your business model may be set up initially for, small customers, but think long term, because a customer that you engage with today might like what you're doing, but let's just look at a scenario where, they need additional features in it. Well, you can't build those features right now because you don't have the money, you don't have the team to do that. So how do you make sure that you engage that customer and you build on top of it? That particular platform that you're providing to your customer should be sufficient to allow them to operate with the option that as you grow, you could give them more features, but not right off the bat. I've met so many companies where they spend lots of hours and eliminate or basically deplete their finance. Many of them are bootstrapped just to build hundreds of features for one customer and then get nowhere. Because now they have no more money, they're desperate to get financing. Focus on what gets you in the door, then build the features as you're looking for funding. So ensure that you see a venue for revenue for the company at a certain period of time, and also allows you to build alternative revenue sources. And that is what's key about being able to scale. So remember not to spend frivolously, because one of the things that when you pitch this deck, an investor will quickly understand whether you spent lots of time building all kinds of features that are useless initially because it didn't allow you to scale and grow the market, which means you just basically are very good at spending money unnecessarily and are not frugal. Why should I give you money? Because you're going to take my money and do the same thing. So make sure you prioritize what customers need right now, not what they might need in the future. The next piece is what every startup that I've met is the most excited to talk about, is the technology. How does your gadget work? What does it do? Where does it fit? Who do you do? How do you do this? It's good that you come in and spend time with this passion and show that you built something phenomenal and unique, but don't go overboard. Remember, save that to talk with customers, because the customers are more interested in how this benefits them. For an investor, it's about the business. It's about making sure that this technology that you've built is basically time to market. It is the right opportunity for you to get into the market right now, because this technology helps leverage something that a customer needs. Some of you may be building something that will change a whole environment in the future, but it's rare that we meet these types of companies. It's better for you if you could influence a market, but those are rare, and wishing you all the luck if you're in that position. I put a little bit of a chart here showing, if any of you are doing anything around what I call the new buzzword of AI, which has actually been around for several good years as it was built. If you're anywhere in this spectrum of what you're building, look exactly and see where it sits, because it's been around for a while. So you already have competitors. If you look at kind of the circles show the area of specialty, and the yellow shows kind of the verticals of target markets. So if any of you are doing anything around quantum computing, pharmaceutical is your target market, financial, logistics, all of that, it's already in the process and being built, which means if you have something unique, go and look and make sure that no one else is doing that if you're going to be influencing a market. So when you speak about the technology, don't sound too arrogant, because investors in front of them get to hear hundreds of pitches, hundreds. They start to understand the market. They might have met someone who's doing something like that. It's up to you to go and do the research and find out if anyone else is out there. The next piece, which is very important, is great. You told me, the problem. You told me how you're going to solve it. You told me how you're going to make money. But how do you get it to the market? How do you actually scale it? How do you tap into an ecosystem to really drive that demand and show growth? It's really an ability of you to demonstrate that you can communicate and communicate and communicate to an audience to sell this product and convince a target market to buy it and use it and give you positive feedback, tell others, basically brand, and have your audience being able to adapt and leverage on this opportunity to sell it to others. How do you do that? If a lot of startups are at a very early stage where they have maybe an MVP and they've talked to customers, if you can't get feedback from the customers and you cannot support customers, there's no way you're going to be able to grow this. Prove to the investors that there is a market opportunity out there and you know how to reach that, and you have literally spoken to your target audience and got that feedback and are able to adjust your technology or whatever you're building to support what they need. Without that, the investor will not be able to see how you move forward. The other piece of the marketing and sales is, how do you network? How do you tap into your potential customers? What is the strategy that you're using? When we look at today's environment, it's really easy to build digital platforms where you share information about what you're doing, but it could be very costly. And it's a strategy of how to get out there. Do you have that strategy in place? Have you even looked into it? Have you even considered that opportunity of what it takes? And I mentioned that earlier. The people in your group, the team, do they know potential customers that you could start engaging? How do you create that domino effect for your customers to use that? What communication channels are you using externally? And it's not only externally, it's also internally. The strategy internally of how you bring a product to market influences your ability to communicate it to the external world. And a lot of companies fail in doing that because many times, even though you're small, there isn't an agreement within the small team. One individual, the CEO or the co-founder goes out and talks to one customer, another co-founder goes talk to another customer, and they're selling completely different things. They come back and they say, well, wait, why are you telling that? There's a lot of inconsistency. Make sure that your communications are consistent internally and externally, because when investors will do due diligence, they're going to look at that. They're going to evaluate how you operate inside to see that you have the capabilities to then communicate to the external world, which is your target audience, your customers. The last, an important piece, it's not the last, but it's the most important piece in this whole story is, and I mentioned that before, you're not the only one that's building some sort of product or service that solves a particular pain. You're going to see that there's different nuances on how another company may be solving that pain. But how do you talk to a customer and convince them that your product is better, they should use you versus a competitor? How do you align your strategy as well with the competitive realities that are out there? You may be first to the market, but you may be first to the market for a very short period of time once you're discovered. Someone else might have already thought about building it, but they didn't find that right nuance, and they saw that what you're building, oh, well, that solves that problem this way. Why haven't we thought about it? We already have most of it, and they're all of a sudden ahead of you. So make sure you truly do a thorough analysis to find out who are your competitors and it's not very difficult to find. There's hundreds of resources today. Talk to your investors as well. They know who's out there. Find out what others are doing and how they're doing it and how differently are they. And if you cannot find competitors, which is very hard to believe, because almost every over the years of pitch decks that I've seen, it's been very rare that there wasn't at least one competitor out there. But if you're one of those that cannot find a single competitor for what you're doing, look outside of your local environment, look outside of maybe that vertical to see something that may be relevant that can become a competitor. Look at the different verticals that you're targeting because it might be hidden and you just didn't see it. That's how you find it. And once again, when you describe the competition, you really need to look at what is truly different about you versus them. What is the value that you provide that allows you to scale and grow at a much faster rate than your competition? And why you? Why will they buy from you? It could be efficiency, it could be price. Those are the most simplest things to answer, but they tend to be not the ones that actually influence how you move in the market versus your competitors. It tends to be specific verticals that you are serving, that others may be serving different verticals. So it gives you a little bit of breathing room and then allows you to then jump to different vertical. Make sure you show the investor that you are focused on initial vertical, because as a startup, you cannot chase every single vertical out there. You don't have the financial means. Doesn't matter if it's anything digital, it's very hard because every single vertical has different requirements. You can't meet all the requirements. So make sure you're down to earth and you're being realistic about what you're building. And that will relate to how you evaluate your competition and how you describe your competition to the investor. Team is very important. At the end of the day, an investor is investing in people, no matter how great your technology is, no matter how good you're able to sell yourself. If your team is not a cohesive team where there's the right expertise and an opportunity to demonstrate that your team is a team that works together and understands what the mission of the company and everyone is agreement, that gives you a leverage into moving forward. I have met hundreds of companies where they go out and pitch, they go through the due diligence process, the investor then interviews separate co-founders, separate team members on their own to find out there is no cohesiveness on how they envision the company. That is the last thing you want after having gone through all of this. So you want to make sure that you have a team that works well together. Another thing is, it's very clear and understood that you cannot have every type of team member in there, from the CTO to the CMO to all your marketing. You cannot have that many people when you're limited on financing. Many times at an early stage, it's clear and understood that a lot of the people that are there, if it's a 2-person team or a 3 or 4-person team, you're wearing multiple hats. That's okay. Investors understand that. But what's important is that those 2, 3, 4-person team that's building this understand what it takes to build a realistic organizational structure as they move and build that company. So they are able to already tell the investor, if you give me a certain amount of money, we already have people that we could bring on board that will meet these categories to help us move quicker. So what is your strategy to plan to acquire that talent? Or even, I'm using the word steal talent because they might be working for other companies right now, but you know that this is the kind of talent that you want and they're interested if there's funding to come and join you. What does that mean? You have to be able to sell that. And the way you describe this to an investor is by making sure that you have demonstrated they've already built some sort of early process and procedure to do that. From looking at hiring people, having your services that are already available out there on the side that will help you with the HR. Because you can't have HR internally, you don't have the funding for that yet. But there's some company on the sideline who could help you. Maybe even have a CFO that will come in temporarily when you get the funding to help you with this. Same with technology tools. There's hundreds of tools out there that companies use. Make sure you choose one initially that you could get points for free from lots of these companies that offer this, but make sure you choose the right tools that help you grow. That's a strategy that shows that you're frugal, yet when the funding will come, this tool that you've used will already allow the rest of the team to work with it and grow with it. And you're not looking at, multiple and hundreds of tools that you're spending money for nothing. I don't want to make a kind of a square type way of evaluating things because it's not always going to be perfect. You are allowed to make mistakes, but make sure you demonstrate that you could learn from them. We're not perfect as humans, and we are emotional when we work together in teams, and people do pull each other from one side to another, but it's part of being able to come to terms and agreement. So when you present yourself in front of an investor, you're able to show them that you have a team that's ready to execute on the mission and vision for the company that can scale. That's your mission. Before you go through the final slide of, you need funding, you have to show how you make the money and how you will spend it. And many times I have seen, hundreds of decks where companies on the last financial, they basically show what's called a hockey stick. It's just at an angle, always showing a trajectory of we're going to make from zero to millions of dollars. You know what? It's okay. You can show that, but be realistic, because we know the reality that it doesn't really happen like that. It's always a rolling hill. We have our ups and downs. It takes time to close deals. When you're selling to enterprises versus consumer, depending what verticals you're in, it takes time. But fundraising also takes time. So how do you show this chart to make sure that there's a realistic financial trajectory for your company? The way to do this is show a clear financial roadmap, which means if you're looking for funding for, continuously to build your technology versus marketing, commercialization, depending on what you're doing, maybe, it's an invention that needs patents, so you got to spend a lot of money on that. You have to have a plan of action on how to meet these goals that are realistic. Also, demonstrate, and I've kind of mentioned this a couple of times, how to avoid overspending on unnecessary features or software platforms to help your team or whatever it is that you are doing, show them how your burn rate stays stable and it's frugal and it's based on growth, where you're positioning your startup for long-term success. Then be happy to see a chart that shows a hockey stick shooting up, as long as it's realistic. And one more point about traction. Investors love traction. It used to be that ideas where investors would give money just for ideas, but that's very rare today to have that opportunity. Investors really want to make sure that you have tested out whatever you built with a customer and even got to a point where they're using it, that you can show that, hey, I have some traction. They love that, because that means you're out there and there are opportunities. But the proof is that just because you have one customer, you got to show them that there's an opportunity to get more than one customer. Sometimes just because you have one customer doesn't mean you can scale. You've got to make sure that this literally gives you that trajectory for scaling. And what does that mean? Also, for the finance, if you show up at an investor's, if you want to show up at an investor's meeting when you need the capital right now, good luck. It's better to raise capital before you need it, because as I said, it takes time. The due diligence process takes time. Just to sell it and get in the door takes time. So do it right and plan ahead. The last slide is really your summary slide and the concluding slide that basically says, I've just told you this great story. I told you how great we can be. Now you need to tell them what you want. So why are you here? So how much money do you need? Where are you today? Where will you be in a few months from now? Is this money for 18 months? How long is this runway for this money? What is the return on their investment if they give you money for 18 months? Do you need a follow-on investment? Many investors, if they invest in you, they always put a little bit of money, on the side for follow-on investments. You want that. That's to your benefit because they believe in you. You need to be able to sell this at the end. You need to tell them how you're going to use these funds, because no one writes a check for nothing. What is your value proposition to the investor? Now is the hook. And the strategy behind, you basically built a picture for them to show them how you structured an equity package for them to be able to put their money down with an assurance that at some point there's going to be an exit for them. And that exit means, do they believe that you can capture that marketplace quickly based on where you are today and where you could potentially be? Which then would ask him, wow, I don't want to miss this opportunity. I should invest in them. That's what you want. You want to reach that environment to make sure that they're so excited, they want to go through that due diligence and learn a little bit more about you and your team. With that in mind, I am pretty much done with presenting what it takes to build a solid deck with a strategy in mind, and encourage you, as part of going back to what we do at TechLAB, we are hosting an event on the 26th of June where we invite companies to come and pitch to us, because on November 20th, 2025, we will be selecting a few companies to pitch at. If you're not familiar with them, Hero City, which is founded by Tim Draper, who's invested in quite a few companies, very successful investor. You're going to be pitching in front of investors. So if you would like to test out your pitch deck and you have something ready after going through this, please don't hesitate to send a pitch deck, and I'd be happy to give you the email address and join us. Love to help some of your companies. If there are any questions, love to answer any questions from the audience out there. I want to make sure that anyone that has listened to me today has a mindset of building a company that will be successful with a true market opportunity. It's not a theory or research or finding or, some patent that you built. You really taking ownership of an idea. You have an ability to deliver to the market. You see customers that are going to be benefiting from what you're doing. You have a solid go-to-market strategy, and you're really focused on winners. It's not just, lots of different ideas. You're spending less time on executing to a target audience that's truly going to benefit. Your team is phenomenal. You sold me a phenomenal team with resources that are in place and that you can move quickly and implement to accelerate quickly into the market. You're empowered to push boundaries, and that's what investors want to look.
Wow. Okay. Thank you so much, Sarah. That was absolutely fantastic. I mean, going from things as nuanced as like knowing when to transition to a new topic because you need to read the room and know when you've kind of lost interest, to understanding just how many resources need to be allocated to the actual raising process. That it's not something quick, that it's kind of all hands on deck. You pause development. So think about that early. Otherwise, you'll get yourself stuck in a pickle if you're not careful. So yeah, that was excellent. Everybody, that's probably something you should even listen to a second time because that was really well done. We do have one question here coming from LinkedIn. We have, hi, Sarah. I see lots of founders create a matrix of their features versus the competition. Boring. And never enough time to dig into those feature comparisons. What are your thoughts on this tactic?
Never enough time. Repeat that last piece.
Oh, sorry about that. Here, let me add it up here.
Founders matrix of their features versus the competition, boring and never enough time to dig into these features comparison. What are your thoughts on this tactic? I agree with you. I see that all the time. It's hard. If you look at the competition slide, they always put all the companies' names on there, and then these are all the features of and the difference, and there's all these check marks. For some companies, that works well if it's easy to understand what the features are. Remember, investors, they are not experts in what you're doing. They're generalists. Sometimes you can run into experts, but they don't go into the nuance. They look at the big picture. So I would try and avoid that, but I would look at the features and up-level the content on that to show a business strategy. It's all about a business strategy. If these features bring revenue in, that's what's important. And the other companies aren't able to generate revenue on these features, then bring them in, show them. But explain that. That comes in from your technology slide. Because when you describe your technology, your most passionate slide, that's the one that's going to tie into that. I hope I answered the question. So it depends. There is no wrong answer on how to use that because I don't know what the feature is and what what you said before to reach to that level.
No, I think that's a great answer there. And looks like we have about just shy of about 3,000 viewers over on Twitter at the moment. I don't see any questions coming in over there, but I guess given that that's the case, is there anything else that you would like to add? A little bit of advice there, maybe balancing. Okay, well, one question like I would have is like, how much should you balance maybe narrative against more like hard figures, right? Like sometimes you see somebody go in on their pitch and it's narratively compelling, right? But there isn't much like stats or analysis to back it up versus other times you see somebody come in and it's like the math is all there, but it's just really, really boring. And it's not really something that gets anybody excited. I guess like striking the balance between those two.
I have an answer for that. Those numbers about market opportunity, what's called SAM, TAM, all those numbers, those are, a lot of people have done research. They pick up numbers left and right. Those numbers are just, from an investor perspective, it just tells them that, okay, you understand a little bit of what's out there. You've done a little bit of the research on out there, but it shows everybody's going to show a big market opportunity. It's normal. I mean, that's what you want to show, a big market opportunity. But the nuance comes down to customer acquisition and how quickly and where. It's the focal point of where that go-to-market strategy takes you to reach that market opportunity. Because that market opportunity, everybody talks in billions and billions of billions of consumer. It's always billions. It's always the number with billions on it. And then, we're going to be very conservative. Maybe we'll target 1 or 2%, and then we'll get our market share. Great. How? Show me how you do that. By your go-to-market strategy with the customer acquisition. Who have you talked to? And how many customers do they have? Another thing is from an implementation, depending on what the technology is, many times it takes time to implement that technology into a customer's platform. Again, it depends on what you're doing. This is not like selling furniture. You buy the desk, you take it home if it's already built, or you buy the desk like in IKEA and you build it. It takes a little bit of time. If it's technology, sometimes there's integration, there's support, there's training, there's all kinds of pieces in that in that process. You need to describe that because that's what kind of stops you from scaling quicker. Because if you need to train your audience, that takes time. You need a team to do that, or you need to create these videos that will train them. All of that takes time. It's a slow integration process versus something that can quickly be adapted and scaled. Again, it depends on what you're doing. So when you tell me 5% market share, in what time scale, how quickly, who are they? So that's part of the narrative with the strategy that will demonstrate that you just didn't pick out some numbers from a hat and put them on a slide. A lot of those slides are always these big circles, like I said, with the billions and the millions, and then it goes down to Sam Tan song. Okay, I have no problem with that. You still need to go through that process because it just shows that you do understand what you're dealing with. But it's large scale, and many times, like I said, it's hate to do this, but where does the wind flow today? Coming up with these numbers. The reality is, it's the bottom up of being able to engage with real-time customers. That's where the market opportunity. And then there's also, some technology is something that will be viral. That's very different too. So depending on what you're building. If it's a viral opportunity, that's challenging as well because it's about branding. Branding is expensive. How do you start early enough branding where it catches on to do that? Again, that is something that I rely on the startup to give you that answer if that's where they're going. Then there's the type of companies that are doing both hardware, a little hardware piece, and a lot of software. Once you've got the hardware piece in it, that becomes challenging because are you providing the hardware? Is it a third party? Where's the services behind it? If it breaks down, does that mean your software is no longer integrating with that? Who's managing all that? Have those answers. Because if there's a hardware play, it's more challenging. There's a lot more moving parts here from shipping. I mean, you got to get that hardware to them to be able to provide that software. Who's taking that, that logistics steps? A lot of times startups forget. They think, it's just a I'm a third party. I'm going to deal with them. It's just my partner. They're going to, okay, what happens if they don't deliver? Does that mean your software is no longer being able to operate, or it breaks down? Who do they call? They're going to call you because they're relying on your software to do that. So all of those dynamics create an impact on how that narrative is being told.
Okay, excellent answer. And then we have here Farah, who appears to be your student.
Oh, yeah. Yes.
I have a question regarding startup funding. At what stage of a company is it appropriate to start seeking investment? Is there such thing as asking for investment too early? Thank you in advance for your guidance. That's always a hard question.
Yeah, it is a hard question. Depending on your target investor and so an investor is in some essence a little bit of a marriage. You're getting married to these investors. There's the hands-on and hands-off investors, but in general, you tend to quote unquote marry them. You want an investor that will help you, if possible, to move to that next level. But a lot of investors are a little bit greedy as well. I mean, they want to put money down where they kind of have a visualize of an exit. Like I said, this is not charity. If you can get to a level where what I call is you have an MVP, you have a proof of something that can show that it works, that is a great time to go after funding, because now you have a proof of a product. And again, all that narrative intertwined, and you've done your homework and you've talked to that. What I mean by an MVP is one of your customers has actually used it and can vouch for it. And not only that, they can't wait to get a hold of it. They're willing to pay you. Go out and start looking for funding. It's never too early to go after funding. It really depends on what type of investors. There's angel investors, there's the venture capital, there's hundreds of different types of funding. A lot of the companies I deal with go after the venture funding, and venture funding is very competitive. Unfortunately, it's so competitive that maybe 0.01%, I'm just, giving this because of what I've seen, get that funding. So it's not that easy. Look at different sources of funding, because that's going to make a difference on, how early you go, how quickly you tap into the market. So yes, it's it is kind of the positioning of where you put yourself, not to it, because once you have an MVP, you want to go, you want to start running. So should you maybe start a little bit earlier? If you are assured that that MVP is going to work, hey, go after funding. But more important is to build that narrative. If you can't build that narrative with that deck, don't bother. Don't go out in front of anyone.
Okay. Yeah, great viewpoint on that. Okay, looks like we're at the top of the hour, so we'll probably start wrapping up here. But if you have any kind of closing comments you'd like anybody to know, I know you had mentioned like kind of a couple upcoming events, things like that. But if you have anything else before we wrap up here.
Well, no, I'd like to, anyone out there, before you go funding, I'd love to get a hold of your pitch deck, and Why don't you join us and come pitch to us? We are going to have a series of events in the next, I would say, 6 months, with a lot of great partners who can give you insights with an opportunity to pitch to a very famous individual and other investors in November. So if you have a pitch, please send it to us. It's at info@techlabcenter.com, and we'll get back to you. Maybe you could come and pitch, and you could be located anywhere around the world, because we will facilitate similar to this, either virtual or physical if you're in Silicon Valley. So again,
Awesome.
info@techlabcenter.com. You can go to techlabcenter.com and you will see we're in the process of posting all of the information. So it should be coming up soon. But if you have a pitch deck, go for it. We'll get back to you.
All right. Well, thank you so much, Sarah. And thank you everybody for listening in, and make sure you take advantage of that, because that is a tremendous resource to have. All right.
Thank you everyone for listening, and we look forward to hearing from you. And thank you, Austin, for hosting the event today.
Absolutely. All right, everybody. We'll see you at the next one.
Bye.
Bye.